Alright, welcome. This is Bob Joyner recording this on January the 6th, 2019. And in this video, what I want to do is talk to you about what I'm calling the Forex Trend Scanner. And as you can see, it's just a series, a whole bunch of red checks and green checks. And right now, you don't see any particular way that it might be organized. So the purpose of this video is to help you understand this scan. As you can see, we have multiple pairs listed over here on the far left. Those pairs are inserted across the board, same position across the board. Okay, you'll also see that the red checks are on the left side, the green checks are on the right side, and red of course means bearish, price going down, momentum going down, and on the right, green means bullish, price going up, momentum going up. Okay, beyond that, you'll see that there are three columns for both the bears and three columns for the bulls. Those three columns represent different time frames. So moving left to right with the bears, just to point out here, we're looking at the weekly time frame primarily. In the first column, we're looking at the daily time frame. In the middle column, we're looking at the 4-hour trend momentum in this third column here. And then on the bullish side, same thing repeats: weekly, daily, and 4-hour. Okay, so this scan is going to be updated on my website several times a day to make it easy for people to access it and to see the information here. But let me point out a few things about what it means. The first thing is, if you're sitting down to trade, you want to know what the trends are, and you want to know what which pairs are doing well, which pairs are not. There are various tools out there. Some are free, some are pretty expensive for determining trends in the currency market. This one's going to be free, and just want to show you how it works. One of the first problems I have when people talk about what's the trend of a currency pair, or the trend of anything actually in the market, is the fact that they're not telling you what's the time frame they're looking at. Okay, so for example, if we look at this scan here, what we're seeing is that the Aussie pairs, as I record this, on the daily time frame are very bullish, obviously very bullish. On the weekly time frame, not so much, right? So while you can be trading this daily chart long for these pairs right now, you would also be aware of the fact that we're still not completely, we still have some overhead resistance possible, because there are still some red checks on the larger weekly time frame over here. So knowing which time frame you're trading is important. Knowing the trend for the time frame that you're trading is critical. Again, if you're looking at the daily time frame right now, you would be short most everything against the Aussie, because the Aussie is obviously very bullish on the daily. So you would be short the Euro Aussie, Euro CAD, because again, you can look up on the daily, the CAD very bullish. So you can step back. For one thing, you can just step back and see all the red and green checks and see which currencies are strong on which time frames, and you can put those together. You see bullish up in here, a lot of green checks, you see a lot of bearish checks over here, so you put those together. You'd short the Euro Aussie, you would short the British Pound Aussie, you would short the US CAD. So that's the first thing to notice, is the trend, and to notice the trend on the time frame for which you are trading. The other part of that is to trade contextually. This is something that many of you have heard me talk about many times. And the idea is that a trend occurs within the context of a broader trend. I already kind of alluded to this. We talked about the Aussie right now being very bullish on the daily trend, but not so much on the weekly. So you can trade this long for all it's worth, but you would also be using stops to make sure that it doesn't suddenly reverse, and you might be looking for areas of overhead resistance, such as historical lines of overhead resistance, price resistance, in case it cannot break through those areas. Okay, so those are just a couple things. First is the trend. Notice the trend for the time frame that you're trading, whether it's weekly, daily, 4-hour. and notice the trend within the context of its larger trend. So again, if you're trading the the 4-hour charts, 4-hour, 30-minute charts down in here, then you would want to know the context. Pretty safe, right now to be trading short-term Euro Aussie because of the context and the number of red checks across the board that you see versus the number of green checks. Look at the Euro CAD. There are no green checks on the Euro CAD on any of those 3 time frames. So pretty safe short at that point. The other thing that this scan tells you is momentum. I'm not going to go into each check mark and what they mean, but they are based on systems that I've created that show trends plus momentum. So it's not just trend, it's momentum in the market as well. And this does a couple of things. You can look at the scan and make sure that you're not on the wrong side of the trade. If you're trying to hold on to a pair where you're losing money, you look at the scan, you see that it's full of red, and you're long, and you're seeing that you've got plenty of red check marks here. Then it's kind of a double check on yourself to say, maybe I'm on the wrong side of the trade. So that's part of the idea there as well. Another thing that I want to point out that I've already alluded to, and that's to show relative strength. There are various apps on the market, various systems for showing relative strength and how lines separate over time. What this does is you can just look at this, and as already mentioned, you can, on the time frame that you're trading, you can look at what's strong and what's weak on that particular time frame. Again, going to the daily, as I mentioned, you would pick out the strength of the Aussie versus the weakness of the Euro, the strength of the CAD versus the weakness of the US. Okay, so you would look at relative strength in that way. The last thing I want to mention to you to watch on this is what I call the opportunity box. And a good example of that, without showing any charts here, is if we look over at the Swiss franc versus the Japanese yen. And actually, if we look at everything pretty much against the Japanese yen on this larger time frame, you'll see that this 5th check mark is not checked. So that's an opportunity box. That little open box right there where you've got 4 red and blank is an opportunity box. And you'll see one there. You'll see one on the Euro Swiss. You'll see one on the Euro Yen. You'll see that several are related to the yen on this larger time frame. Now, it does not mean that this is the exact time to get into that trade. I'm not saying that, so you have to be careful with it. But what I'm saying is it's possible that at this point the Swiss franc Japanese yen is overbought within the context of a larger downtrend, and therefore you would be waiting for the signals that you use to enter that as a short on that higher time frame. Alright, so those are opportunity boxes. If you have 4 red check marks and a blank box, that's an opportunity. So at this moment, that's the only one that shows up. If you have all 5 red check marks, then momentum is strong. It means that trend is strong. It means that things are currently in that mode, full steam ahead, if you will. And so if you're going to jump in, you can jump in at that point, but you have to be also realizing the fact that watch out for areas of support resistance where price might bounce back, since right now it's currently full throttle in a bearish mode. So you'd be watching for areas that might show support for that trend to see some profit taking. One last thing I want to mention to you is, depending on the time frame that you're trading, these trades will take time. So for example, if you're trading on the 4-hour scan, right, then those trades are going to be much quicker to occur, and these check marks are going to change more frequently than if you're looking at the weekly check marks over in here. So that means that if you've entered a short, let's say on the Swiss franc Japanese yen, it could take anywhere from an hour to 4 or 5 days for you to see the profit potential of that if it moves back south again. Alright, so I hope you've enjoyed that analysis of the Forex Trend and Momentum Scanner. It's very powerful. I know it takes some time to get used to using it, but I think you'll find as you get used to using it, very powerful to help you stay on the right side of the market. For the updated scans, you'll see the website listed right here. You can pause the video and write that down. but there should also be a link. If you're watching this on YouTube, there should be a link in the description box below the video with a link directly to that URL. All right, thanks for watching.